Good day, beautiful people. It is I, Kagiso, the voice of the cryptos, with another exciting video on technical analysis. Alright, fantastic. So today what we're going to be doing is that we're going to be taking a look into one of my favorite tools. It's called the Fibonacci Ratios and Retracements, and I'm going to be explaining to you how I've been using them or how to use them the right way so that you can maximize your profits and your rewards. Alright, fantastic stuff. So this is how they look like, and yeah, reason I'm actually doing the video, it's in regards to the fact that this is an element, a very small element to the harmonic trader over the harmonic trading system that we have over here. So I'm gonna leave a description in the video so that you guys can check out this harmonic trading robot. Alright, fantastic. So let's get into it. So this is how they look like. The levels start from 0, then is 236, 382, 50%, 618, 786, and 100%. So these levels are vitally important when you're looking at the market retracing. So what I'm trying to explain is something like this. The market is moving up, faces some rejection over here at this point, comes down and pulls back. So this applies if, let's say, you're certain about the market moving up. You need to look at where or which levels of the Fibonacci's the market will find resistance before continuing its way back up again. So that's why we use the Fibonacci ratios. So if, let's say, for instance, you're trying to catch a market which is already moving, you'd find yourself in a very bad position because you're going to be thrown by the amount of volume that's going to be there. So you're going to find yourself, maybe you try to enter the market here and the broker is going to put you you try to enter the market over here, the broker will put you somewhere here, and when the market retraces, your account can get blown because of that, and it's just really bad. So it's better when you enter in the market that it's good. If you're looking at buying, enter the market while it's still going down, and if you're looking at selling, enter the market while it's still going up. So I'm gonna show you how to draw it because there is a specific way that you should draw it. So start over here. You start with the 0% over here, which is the 100, and you extend your Fibonacci ratios until so you take the lowest point and then you take the highest point, and then you measure the pullback from there. So think of it like this is a journey, and then you're trying to see how far back did the market push back from the initial direction, because this is going up. So you're trying to see how far back it pushed in the opposite direction. So this is the pullback, and pull back to 50% before resuming its rally to the upside. So this is the reason why Fibonacci ratios are important, is because levels like your 50% and your 618 are more of your key turning points, and that's where you look for the most resistance. And yeah, so that's when we're constructing, we're looking at entering the market. So if, let's say, I was looking at entering this buying position over here, or this move up, I need to be looking at buying. Okay, so I see the move going up, and maybe I don't act in time to catch the move going up. I'm not so certain about the move going up. I'm not so certain about this whole trend that is happening as the market moving away from this sideways movement that it has been having over here. So before I jump in over here and then I see how far the market has rallied, and I'm looking at entering, I can't look at entering the market from here. It's already too high. We need to look at the market pulling back, and once it pulls back around the 50 and 60, look for candlestick confirmation to confirm that the market has rejected. If you're not so clued up on candlestick confirmation, check out our website. We've got some educational material that's actually quite free there. And yeah, also, once after this video you understand what Fibonacci retracements and Fibonacci ratios are, check out our videos on trading the AB is equals to CD pattern, because it's a very simple strategy, but it is very profitable. Okay, so I hope this actually adds value on how to trade it. Leave a like on the video, subscribe to our channel for more educational material like such as this. From me, my side, peace out. Do you have a lovely day. Cheers. Alright, fantastic stuff. Now that you've learned on how to use the Fibonacci retracements as a tool to better your trading, we need to learn the next thing. The next thing is to actually understand how the ABCD pattern works, because it's a very simple strategy, but it's one that can generate you a very good and steady return upon the market. It has a very good risk to reward ratio. And click the video over here and watch the ABCD pattern so that you know how to trade it and profit the market. See you on the next lesson. Thank you.